What's up, guys? Tyler here from Vant Trading, back at it with another video for the new Trader Pathway series. And today's going to be a very important one. It's something that a lot of traders I know struggle with, and it's one of the most important driving factors for being a successful trader. Now, today's video is going to be about developing a trading strategy. And in order to develop a trading strategy, there's one thing you have to do first, and you have to self-reflect. What are your strengths and weaknesses? You have to make sure that your skill set matches your strengths and weaknesses. So, for example, if you are very quick and you can react and you can think on the fly and you don't have to sit there and analyze and think very slowly, then maybe you're a scalper because you can react quickly to price movements and data. If you're more of a slow thinker, you have to digest the information, you have to analyze things a little slower and look into the move in more detail, then maybe you're not a scalper. Actually, you're definitely not a scalper. Maybe your skill set is more in the swing trading or intraday trading route. And so, first things first with developing a trading strategy is you must know yourself and you must know your strengths and weaknesses. And so before heading into the process that I'm about to go over, first thing is you have to develop, or I guess identify what your strengths are and what type of trader are you. Are you a scalper, a day trader, or a swing trader? Build that off of your strengths and then move on to then developing your strategy. Now, you have to create a strategy that not only fits your style, but it's actually profitable. Well, duh, Tyler. How do you create a strategy that's profitable? It requires your strategy to have an edge. You need a massive edge in the market in order to be profitable in the long run and consistent. Here's the thing. Most people fail because they blame everything on their risk management. They blame everything on the lack of psychology that they have, instead of focusing on their edge in the trading strategy, which is really what makes you profitable. I mean, having an edge means that your trading strategy has a positive expected value. And what's a positive expected value? What is an edge? Well, it's the probability of winning times the amount gained minus the probability of losing times the amount lost. So basically, what an edge is having a positive, a profitable trading strategy, right? And so you have to have the probability of winning be greater than the probability of losing. And we're going to dive into that on how to actually create that system. Most people think, and before we hop into this system, I want you to understand one thing. Most people think that their winning streaks are due to their strategy being great, and their losing streaks are due to their psychology and their risk management issues, as I mentioned. But the fact is winning streaks are just an inevitable variance, right? If I were to sit there and flip a coin, I can get head 6 times in a row. Does that mean I'm a great coin flipper? No, it just means that it's just an inevitable variance that I'm going to go on a winning streak. Same thing for trading. Just because you go on a winning streak doesn't mean that you have the best trading strategy. It's something that's going to happen. But you got to make sure that your strategy has an edge in order for those winning streaks to be sustainable. And so one thing I want you to do and read this book I'm about to mention. I'm going to put it right here. This book will help you realize the other side of trading. It's called Fooled by Randomness. See, trading is really just a random walk, right? But having the probability of winning and having that edge is what gives you the leg up in trading and what makes you a profitable trader in the long run. And so you have to understand that although your winning streaks are random, they're going to be more sustainable and more long term if you have an edge in your trading strategy. Okay. So, diving into this, you need to make sure that your trading strategy has a clear, predictable criteria that you can identify and apply in the future over and over again. You can't just use hindsight bias and say, oh, everything looks clear as day. It does this, it moves here, it does this, boom, I make some money. You have to systemize it. Create a systemized approach with that trading strategy. Make sure you can actually create a list of variables and a criteria that you say, hey, I see this. This is checking off all of my boxes on my criteria list for this trading setup. I can see it real time, live, boom. I'm going to trade it. So here are the 4 ways that you can develop a trading strategy and make sure it has an edge. And there are 4 things, and keep in mind these can overlap, but there's got to be one main approach that you take. And so, number 1, the first way you can create a trading strategy is called observation. Watch the markets every day and see if you notice any specific pattern or price action. You're just observing the market day in and day out. Now, this is easy to do in a slow market, but you can run into a lot of dead ends and it can take a while. So your path to success and creating a profitable trading strategy with an edge by just observing the market day in and day out is going to take you a lot longer to become profitable and successful. And it's going to take, you're going to hit a lot more road bumps and dead ends by doing this route. But that is one way you can do it. The second way to create a trading strategy is called the hypothesis method. A logical idea that you can back test and you can see if it maintains its trueness in the market. So you say, okay, you got to create an idea and then you got to look, okay, does this idea make sense? You're creating a hypothesis and then looking to see if it backs it up with the real data. It can work well. It really can, but it requires a lot of creativity and you need to be able to think of reasonable ideas. So if you're not a creative thinker and you can't really think of, really good ideas or systems, then this might not be for you. Now, the third one, which is probably one of the most popular systems in creating a trading strategy, is called reverse engineering. Looking backwards at past moves to identify predictable variables and setups to develop a systemized strategy, right? So you're looking back at these big moves in the past that's happened day in and day out, and you're trying to see, okay, is there any systemized variables? Is there any specific things that I can look at to create a strategy off of and create an edge in the market? Now, this, very popular, has a high hit rate and is very successful, but you must be able to identify it and systemize it so that you can actually trade it in real time. Like I mentioned earlier, you can't just say this looks good, and so I'm going to try to trade this strategy. You need to be able to make sure that you can actually identify that in real time, and it's not just something you see that happens in the past over and over again. You got to be able to systemize it, create a system. And the number 4, last way that I see that you can create a trading strategy. Now, this is, I think, the absolute best way to go, but it's going to be hard. And let me explain it. This is called mimic. Utilize an external source for trading strategies, mentorship, coaching. This is the most effective, by far the most effective way. And your learning curve will be a lot quicker, a lot shorter. You'll have the high success rate. This is really it's the best way to go, the fastest path to learning, but it really has low accessibility. You have to be able to find a individual who's willing to share and take you under their wing. You need to find a mentor. But if you can go this approach and find a good mentor, this will be by far the most successful way of building a successful trading strategy with an edge. And so let's go more in depth with these systems. Observation. So if I'm looking to trade the markets, let's say, for example, we had this big Bitcoin run, right? Bitcoin was moving and grooving. It was moving really fast. Maybe you're looking for ways to get involved. Maybe you find correlated moves. You find sympathy plays. Maybe if you're trading stocks, you look at Mara and Riot. Those are some of the main Bitcoin plays when Bitcoin really gets moving. So for example, you're observing the market. Bitcoin's rallying really fast. Mara and Riot aren't moving. Maybe you see, okay, maybe there's a way to get some variables that, hey, I think that this will catch up tomorrow or later. So I'm going to buy Mara and Riot expecting that sympathy move with Bitcoin. That's one example. Do certain economic news events move the markets? If I'm trading gold, non-farm payroll, maybe you have a specific systemized approach on trading gold during specific news events. Observe that every day, every news event. Maybe you have a specific catalyst like an earnings play, or or maybe a specific catalyst that brings weed sectors and solar sectors in play. And you're like, oh, then you find this weed and solar plays and you start trading those stocks. If oil's flying, right? If oil's moving really fast, are there some oil ETFs or oil stocks that aren't moving yet and you can jump in on them? Is there some divergence that you can look at? Oil's running up, the oil ETFs and stocks are moving down. Is there a divergence that you could look for in those plays? So just observe the markets, observe the sectors, and see if there's any correlated or sympathy plays that you can create a systemized approach with. The second one was the hypothesis. And so with that one, you have to be able to create that logical idea and back it up. If the dollar is very weak, is it safe to assume that you have a good probability in gold longs? Okay, well, there's my idea. The dollar's really weak. Let's look for longs in gold. Look at the chart and then see if it backs it up. You create your hypothesis and go see if it works. If a stock or commodity finishes really strong for the day, do they have a strong continuation the next day, or do they pull off and pull back? There's your hypothesis. Closed really strong. So let's see if it gaps up and continues. So see if it backs up, backs that idea up. So that's really the second one. A lot tougher because you have to be creative and be able to think of those ideas, which probably takes more experience in the market than anything else. But that is a way. The third way, like I said, which is probably the most popular way, is reverse engineering. Finding the best moves in the market each day and then documenting them and studying them, writing down patterns and common variables. For example, gold might be moving, every Wednesday or every Thursday, or moving really fast. Write down the variables. Okay, it's a Thursday. There's high volume. Is there a news event or a catalyst? Is there a volume breakout? Analyze all the big moves on the previous historic data. And like I said, just write down all the variables, study it, notice any specific patterns that might work. And then what you got to do is document that, right? And then you want to create maybe some scanners to help you find some plays based off the patterns you found. Maybe if you're trading a stock play, and like I mentioned before, maybe you're looking for a volume break. So a stock closes really strong, and you look off of a volume spike, and you're looking for a next day continuation. Maybe you have a scanner that finds the volume spikes with a low float, and it closed at 90% of the daily range, right? So maybe you create a scanner to help you find those patterns. Find patterns in the biggest move of the day and see if you can isolate the variables to give you an edge in the strategy. So that's the biggest thing with the reverse engineering, is finding the variables in those big plays to systemize your trading strategy. Systemize is the word of the day. systemize. You can't just make a hindsight bias, a hindsight approach, and think you can trade that strategy in that system. Make sure it's systemized and you can find it in real time and be able to trade it. So maybe you isolate where the move started. Document every variable from where the move started. Why do you think that move made that big move when it did? Is it a low float? Is it from a certain sector? Did it have any type of news event or catalyst or earnings? Document those variables. Did it have a volume breakout did it have a massive continuation? Maybe you're analyzing a mean reversion trade and you're looking back at historic big moves and you're looking for mean reversions. Did it reject off that 50% mark of the move? Maybe you can find a scalp long off that 50% mark. Did it get back to the scene of the crime right away or the next day? Where did it top out at? Where did it bottom out at? Where could you have found entries or exits? Why do you think it did this? And see if you can create, again, that systemized approach based off those mean reversion trades. Build that database of variables and see if you notice a pattern or a trend that you can test. And then just keep following that approach, doing trial and error until you find something that makes sense that you can find again in real time. And once you find that systemized approach and the variables for that strategy after reverse engineering, then go back to the observation method and observe those variables day in and day out to see if you can actually spot it real time. And there you go. There's something that you can then maybe you spot it, but like a little late. Maybe there's something you have to tweak. You always have to be refining. And then lastly, and absolutely the best way to develop a trading strategy, the best, is mimicking the masters. The reality is every successful trader has learned from traders that have come before them. Why innovate and create a new strategy and spending the time to figure out your own method, your own edge, when you can grab a successful trader, get a mentor, learn what trends and patterns they see and what their edge is? It'll give you a massive edge in that learning curve, and you'll be able to figure things out a lot quicker instead of doing a bunch of trial and error and observing. Do what works. Why create something new when you could do what works and follow a mentor, right? That's what almost every successful trader does. This is a very, very powerful way to create a strategy. The mentor will give you his or her strategies, and you can see what they're trading, why they're trading it. Ask them any questions you might have, figure out what their edge is, and then you can take that and maybe tweak it to your own system. And they'll give you a good pathway to go down to then figure out, okay, this is a good idea. Let me see if I can find something a little better that fits my trading style. Even if you're on your own and you can't find a mentor because of the accessibility, or you can't afford a mentor, use the resources available to you. Go to our YouTube channel, Vant Trading. Study our videos. Study our logic, our reasoning behind everything, because it has a lot of information on it that could still, even though you don't have the mentorship, give you that edge and why we're trading it, where we're trading it, and what our edge is in that trade. It could really just give you a nice head start and a nice path down this road. And then from there, you have to then develop the strategy. You have to test different entries. Test different exits. Are you going to do a time stop for a certain amount of time? Maybe you're going to hold it for a day, a couple hours. Are you going to do a price-based stop? Are you going to trail it before the previous daily bar? Are you going to trail your stop before the last 15-minute bar? Are you going to do your stop indicator based? Are you going to trail your stop along with VWAP? Are you going to trail your stop along with a certain moving average? Test all these things out, and you can create the foundation of your once you create the foundation of your strategy, is then you create the details of the different entries and exits. Identify all the variables which could help your trade. Are you more successful on news events days? Maybe you're more successful when there's a news event and a catalyst. Are you more successful on earnings days? Are you more successful in a bullish market? Are you more successful in a bearish market? Are you more successful in certain sectors? You got to be truthful with yourself and not just think, oh, I'm great at this. Analyze the variables, why you're successful, what you're successful in, and try to go that and try to go that route and building your trading strategy. Set up alerts and scanners to catch the best levels and setups, like I talked about. That'll help develop your system and strategy as well. Continue to journal and refine. Build a big database with charts and variables. Make sure you're constantly refining, constantly journaling, constantly analyzing your system and your strategy to make sure that it's truly an edge that you have and it's working for you. Then you can always tweak and make it better. Now, I mean, that's the whole system right there that you should really follow in creating a strategy. Now, I can go a lot more in depth in this section, but the thing is we're launching in January with a program that's built to help you create this trading strategy. And we're attacking it with the mimic route, the mentorship. You'll learn from us directly. You'll learn what helped us, what edges we have in the market, how to find a strategy. There's a lot of in-depth things that we're going to go over and help you with in the mentorship when we're launching in January. So I'm going to save the time on this video for help really teaching you personally in January when we launch. So that's really it. So again, to recap, make sure that you're knowing what your strengths and weaknesses are, picking what kind of trader you are based off your style. Are you a scalper, day trader, or swing trader? Once you figure that out, then go through the process of, okay, how am I going to develop my strategy? Am I going to observe the market? Am I going to create a hypothesis and test? Am I going to do reverse engineering? Or am I going to mimic and get mentorship and actually learn from a successful trader? And then once you go that route and develop the foundation of your strategy, then you develop it more in depth with certain entries, exits, and create that whole systemized approach. So that's it. I hope you found this super helpful, because I know that this is going to help a lot of people with them being stuck in creating an edge in the market. If you liked it, like the video so more traders can see it and we can help more people out there. Make sure to subscribe if you haven't already, because we have a lot more content coming out, and you can stay tuned with more updates that we have with our website and mentorship. And again, we have Mike coming on next. He's going to be talking about avoiding the noise in the markets. That'll be a good one, guys. Thanks for tuning in, and I'll see you in the next video. Peace.